What is up, YouTube? Welcome back to Stocks by the Numbers. Wanted to do a quick video, another installment of my series of How'd I Do, Let's Review, where unlike the rest of the YouTube stock hobbyists out here that a lot of people are subbing up to, I actually go back, have the guts, hold my feet to the fire, and hold myself accountable to see if we nailed the call, nothing happened, or if I just got it completely incorrect and it did not work out for us. Next company in line to review, NVIDIA Corporation, ticker symbol NVDA, listed here on the NASDAQ. Stock right now, $276 even, down 2 points on the day, about 0.75%. Let's get into it. So this company recently hit a new 52-week high up here, north of $290 a share. As we see, AMD was putting out some weak numbers here that made analysts kind of pull back on the stock. And as we see here, AMD surges today, as Microsoft said to help finance an AI chip push. Now, if a big brand name company like Microsoft is helping out another competitor like AMD, then you should technically have a company like NVIDIA come down. However, today, again, as you can see, stock's barely down $2, holding very steady. So long story short, what everyone wants to know is, did we get this one correct? And in the end, we have got this one massively incorrect. And in my opinion, I still say that they're inflating this stock up, and it should be absolutely nowhere near this price. I did the video. I'm going to bring you guys back here. Right here. Right after this earnings report, this big green candle right there. November 22nd, that's when I made the video. As you can see, it was like right near the close. The stock was rising going into the close, and it closed at about $160 and like 38 cents or something like that. And as we see, after I made the video and I said, in my opinion, that it was very overinflated and it should come down, like 100 points per share, the stock actually ran up here to this trend line of about 187 and change, pulled back here. Looks like we hit a low of only 138.85. And then from that point here, going into the new year, as you see, this was December 28th. So right after Christmas, the company comes down, hits lows, sub 140, and then the bull drops, and the stock basically doubles in value over the course of about the last 4 to 5 months, which is intense in my opinion. Now, obviously, the stock ran up here. We had earnings come out. Yes, they beat on the top and bottom lines, as they've been doing. And obviously, the dividend has not changed. The dividend on this stock has not changed for years. They have been basically just collecting billions of dollars and just not paying it out to shareholders. Now, obviously, if you are a shareholder, it really doesn't matter to you because you're seeing just astronomical appreciation here in NVIDIA. Again, in my opinion, this stock, I know I got it wrong, and it rallied all the way up to, 290. Hit this trend line here, I'll point out in a minute, and then we pulled back. We're bouncing around our fib levels. This is just absolutely ridiculous. And again, not knocking NVIDIA overall. Even when I first made the video up at $160, I said that I do like the company overall. And they're growing. They keep, increasing their revenues. They're doing good business. And, it was definitely a buy. The problem was it was just a terrible price entry. And now with the stock climbing back up to almost $300 a share, I mean, just look at these valuations here. Look at the market cap here. $682 billion, right? Last time we looked at it, it was like $400 billion. So obviously, again, the stock went up over 100 points per share since I made the video. Market cap now close to $700 billion. Look at the dividend yield, because they haven't changed the dividend in like 5 or 6 years. They're paying you measly 4 cents to own the stock. But again, you are seeing that appreciation. However, this is one of these situations where I may be inclined, if I was a shareholder, I may be inclined to actually start to trim the positions here at the top. Because again, technically, looking at the numbers, if the markets do begin to tank, and as we see here, we touched 34,000, the Fed came out, made their announcement, we began pulling back, now we're approaching 33,000. And that's why I always say, I always try to point out the stocks that are tremendously overvalued, because I need you guys to know that if you step in here today at 276 and the shit really the shit really does hit the fan and it starts to really sell off and pull back, this stock can go from 276 down to 76, and it would be 110% justified. I really don't care what anyone wants to try to tell me here. This market cap is ridiculous. It's up at 700 billion. Look at the PE, almost 160. Almost trading 160 times earnings. Now again, on paper, the company does look pretty strong. As we see here, beat on the EPS side for 3 of the last 4 quarters. Nothing to sneeze at. We switch over here quarterly, though, and we can see for the last couple of quarters, not only has the revenue taken a hit, but of course the profit margin has dropped as well. So I'm glad they're kind of like bouncing off of these lows of sub 6 billion for the quarter. Now they're back up 6.05 billion. And of course, they increased the profitability for that quarter. However, I mean, you're coming off quarters north of 7.5, 8.25 billion, and then you drop down to 6 billion. But like, no one sells their position, no one downgrades the stock. It's just laughable. Over the years, again, the company has grown astronomically, going from about 10, 11, 12 billion there up to almost 17, almost 27. But then look, 21 and 22, nothing happened. Nothing happened. So revenue looks like it has plateaued at around like that $27 billion mark, and the profit margin dropped by over 50%. So if you were hyper bullish on this stock in 2021, kind of justified. Moving into 2022, looking at these numbers that the company posted, to tell me that this stock made this run instead of dropping off and selling down into new lows is just ridiculous. My mind cannot accept it. Overall, look, on the technicals, they have a buy. Look, even the analysts have a buy on this, still saying it's going to $284 a share. I mean, it is just hilarious. $700 billion market cap. The company did $27 billion, plateauing their revenue and taking in less than half of what they did the year before in profits. And you're telling me that stock deserves to go higher? No. No way. I mean, obviously, you can tell by the tone of my voice I'm a little upset because I did get this one wrong. And I will admit it, obviously. I made the video at 160. It went up. I thought it was going to go down. It pulled down for us, but barely, and then absolutely exploded and doubled in value in the last 5 months. And again, I know it's a brand name company. I know everyone's hyped about it, but this stock should be tremendously lower. $27 billion for the year with a $700 billion market cap. I don't even know those calculations. What's that, like 24, 25 times yearly revenue? Think about that. We looked at other healthy companies that are growing their revenue, increasing their profit margins. They struggle to trade 2, 3, 4 times yearly revenue. This stock is trading 24 times yearly revenue, and if you ask anyone, they'll say, "Oh yeah, I'm pumped about NVIDIA. It's going to keep going higher." Why? Where? When? Everything I'm looking at with this stock is telling me it's going to go lower. I really don't see anything that is showing me any positives here. And I wanted to come over here and look at some of the numbers here. Look, this is tracking the price to earnings ratio and the price to sales. As you see, the price to sales over the years went from 8.5 up to 14, 19.5, 21.5, still sitting here at about 19. And look at the PE, was 24, realistic. PE jumped up to 55. However, so did the company's revenue, was really climbing. So it's understandable as to why they pumped the stock up. 75 PE. And then coming out of pandemic, the company still maintained almost like a 60 PE. Look at this. Now, 150, 160, whatever the heck we said. Look at the, again, look at how the revenue plateaued, the profit margin pulled back. Look, lowest profit margin over the course of the last 5 years, but you rallied the stock 100% from the lows it hit 5 months ago. It just doesn't make sense. And again, I'm not bashing the company because I know a lot of people watching the video may have a position in NVIDIA. And you know what? At the end of the day, it's all about making some profits. So, if you guys really needed the money or if this is one of your larger positions, obviously, forget about me being wrong. I'll take that in stride. But more importantly, you're increasing your portfolio in value for yourself, your family, your future. So obviously, I wish you well, and I'm very happy. I'm very, very happy for a lot of you. But at the end of the day, I'm sure you can appreciate where I'm coming from here. Now, they have been beating, again, on the revenue side and the EPS side, right? We looked at all of this last time, and that's why I said the company is doing great. They're doing good business. Problem? They plateaued. They're bringing in $27 billion. You're telling me they're worth $700 billion. It's just not realistic. If I gave you hundreds of billions of dollars and you approached a company making $20, $25, $28 billion a year in revenue, You and I both know you would not pay $700 billion for that company. Look at the dividend per share, went from 15 to 16 cents as the company was absolutely kicking ass and taking names during these years. Never increased their dividend, paying less than 0.1% yield for you to own the shares. This company has to do something, in my eyes, to justify this valuation. That they really do. It's just not adding up to me. Look at the debt just increasing: 2 billion, 2.6, 7.7, 11.7, now north of 12 billion in debt. Cash and cash equivalents, as we see, was significantly higher. We're talking several billions of dollars, and is now pulled back really to just a few $1 billion. If we look here at the assets and the liabilities, we add these up, it's about what, like 41 billion in assets, and they have maybe about 19 billion, so about half that in liabilities. So they're trading a 2-to-1 ratio, which we've seen before, right? This is what I'm saying. None of this is adding up. Debt is increasing, cash is going down, revenue has plateaued, profit margin has dropped, dividend hasn't increased in 6 years. Assets to liabilities are a 2-to-1 ratio. We've seen other companies similar to this with 2-to-1 or even better ratios on assets, and they were not trading at these intense astronomical valuations. This is what I'm trying to say. None of this is adding up for me. And that's why if the stock starts to crash down here, it is 110% justified. Cash from operating activities is down. Investing activities is actually up. Cash from financing took a massive hit. Look at the free cash flow. Lowest it's been since back in 2018, when really this entire bull rally started on the stock. Assets, as we looked, was up at 44 billion back in 21, has since pulled back 41 billion. The first time going all the way back these 6 or 7 years that assets have went down. Liabilities steadily increasing again. Look at this. When all of this started, company had liabilities of sub 4 billion. Now they're up to almost 20 billion in liabilities. So yes, assets have increased, 300, 400%. Liabilities have increased, 600% in change or whatever it is. The equity in the company has recently gone down, and the equity, of course, is assets minus liabilities, and assets went down and liabilities went up. So, of course, equity is going to go down. The company's holding, look, $12 billion in debt. Look at the book value. Look at the book value per share of this stock. This is what I'm talking about. Right? Am I upset that I got this one wrong and it didn't completely crater? I mean, of course, we all always want to be correct, right? I think, to my knowledge, this is like the first or maybe the second How'd I Do Let's Review video in over a year that my channel has been up where I've gotten it wrong, right? So, obviously, I have a few feathers in my cap for making some excellent calls. But, of course, I mean, a situation like this, I just have to say, in my opinion, that they're just manipulating the stock and they're pumping it up really for no reason. I remember even that news came out, Nancy Pelosi, right? And I think it was her husband or something had a position in NVIDIA. So then everybody started looking at Nancy Pelosi's portfolio and the positions that she was taking, and she was getting 69% annualized returns year over year, which is impossible, right? You have some random woman in government is outperforming Warren Buffett, the most successful investor that we have, right? I mean, you have to understand, you have to connect the dots sometimes. And listen, I understand that there's some shady shit happening over there in Washington, D.C., but 69% year over year, and then these senators, these speakers, these governors, they all take positions in these tech companies, these semiconductor companies, and these chip manufacturers, and then all of a sudden they're pushing through a bill for billions of dollars to try to, send funds to these exact companies that they own. I mean, just like George Carlin said, it's all bullshit. It's all bullshit, and it's bad for you. But any way I look at it, nothing is showing me that this company should continue to rise. This right here, this book value, $8.96 a share. The stock is $275 a share. I mean, there's a point where you have to take a step back and say, all right, this is too good to be true. I made a crap ton of money here with NVIDIA. Maybe I should just take the money off the table and try to find the next company that is tremendously undervalued. Because I'm telling you, I said last time at 160 that the stock could easily pull back to 100, and it only hit 138. Now it's back up to 280, right? So again, from 275 here to have the stock drop to 100 again, that is completely justified. That's what I want you people to know. That is 110% justified. I don't give a crap about a situation like this. Look at this. They show us here the enterprise value is sitting at $685 billion. Now again, the enterprise value is what another company would view this stock worth if they were to approach them with a buyout. And how the hell is this justified? The company's making $28 billion for the year. Profit margin dropped from mid-high 30s down to 16%. Revenue has plateaued. You're showing me a PE of 160. You're trading 25 times sales. Look at these numbers. These ratios are the highest it has basically ever been. Trading 122 times cash flow, 31 times earnings. 31. But somehow, and again, they're holding $40 billion in assets. They're bringing in $28 billion a year in revenue. How the hell does that add up to an enterprise value of $700 billion? Someone please explain this to me. And then you compare, look, the enterprise value to the EBITDA. Once again, EBITDA, earnings before interest, taxes, depreciation, amortization. 96.25 times EBITDA. Where? When? How? This is the questions that we have to ask. The return on assets, down. Return on equity has pulled back. Return on invested capital is down. The gross margin has pulled back. It says it pulled up again. I don't know. I really don't know how stable that number is. Look at the operating margin. The lowest it has been going all the way back to 2016, this list is showing us. EBITDA, earnings before interest, taxes, depreciation, amortization. Last year was the lowest it's been going back to 2016, and even though it bounced up about 1 percentage point from that low, it is still now the second lowest it has been going all the way back to 2016. The net margin percentage, as we showed, pulled back to 16%, and showing now it's currently sitting at about 23.33%. Still the lowest it's been going all the way back to 2016. I am seeing nothing that is justifying a $700 billion market cap for this stock, sitting at $275 a share. Remember, again, the shit hits the fan for NVIDIA. They have to close up shop, liquidate all assets, everything in their name, pay it out to shareholders. Guess what? You're getting about $9 a share. Right now, $275 a share. Sometimes you have to take a step back from all the bullshit and just use simple logic and common sense to understand what is going to happen in the future. Now listen, they may pump this up from 275 up to 400 a share. You know, it could happen if you're a holder. Again, I wish you the best of luck. I hope everyone makes millions of dollars. At the end of the day, this stock should be nowhere near this level. And if you were thinking about potentially getting out of it and taking profits, in my opinion, I would do that. I wouldn't have expected this rally over the course of the last 5 or 6 months, but if I was a holder at 160, 180, 200, now I'm up at 275, yeah, in my opinion, me personally, I would take the money and run and probably reposition it into some of these other younger, growing, revenue increasing stocks that we looked at recently. There are a slew of stocks that are much, much more attractive here in the numbers and in the charts than NVIDIA right now. Look at the inventory turnover, right? We've been looking at this recently as well, how quickly they turn over their inventory. Look, 2.99, sub 3, the lowest it's been since going back to 2016. Asset turnovers down to 0.63, the lowest it's been going all the way back to 2016. There is nothing in my eyes, excuse me, that is justifying this company being up here. And I just love the forecast here. Look at this. Stock right now bringing in $3.34 a share for the year of 2022. And look at the growth here. 455, 609, 788, 1092 a share by 2026. How is that going to be possible? Again, we're dealing with hyperinflation. We have turmoil overseas. Nobody believes in our president. People are, hesitant to even like go outside, wake up in the morning. The dollar is weaker. Prices have to consistently increase. The new video cards that this company comes out with are like $1,000, $1,200 each. You can build an entire PC instead of just buying this one souped up video card, which, again, of course, there are some independent YouTube channels who run tests and compare the new generations of like the Intel processors to old ones, and they do comparisons of NVIDIA graphics cards compared to the Ryzens and the AMDs. Well, yeah, the Ryzen I think is the processors for AMD, but whatever, don't quote me on that. But I'm sure you guys understand the gist of what I'm saying here. There are comparison videos out there, and a lot of people, they basically say all the same things. They say there's not much of a difference with like the new generation of video cards, and they're probably not worth the price tag right now. They usually always advise you to wait for them to sell off and become just a little bit more realistic in price. And also, same thing on the processor side. They came out, I think it was Intel came out with the i9s, I think, when they came out with that new generation. They compared them back to the i7s, and it was just like a slightly better increase, right? But you're going to pay what? The massively overinflated brand new price tag for this piece of hardware, $500, $600, $800 for a processor unit, when you can, grab an older i7 that's probably going to be able to handle all of the processes that you need it to handle, and you're going to be able to get it for like at least half the price, or potentially even maybe like 30% of the cost of a new one. Revenue, look at this revenue sitting here. It has plateaued at $27 billion, but somehow for this year they're looking at north of $30 billion. And then look at these jumps: 37, 46, 61.75 billion. What do they know that we don't know? And by the way, think about this. The stock right now has a market cap of $700 billion. So if the stock does not move and we go into 2026, let's just say they hit this number. Let's say they beat this number. Let's say they come in and they make $70 billion for 2026, right? That is still 10 times total yearly revenue with the stock currently sitting here. And you and I both know the way they're pumping this up, this thing's going to be at $675 going into 2026, and it's just going to continue to be just this outlandish multiple. So that's why, honestly, I'm kind of looking at it at two ways. It's almost as if you don't know anything about the market, you can almost throw this company into the sector of like a Microsoft, where it's apparently no matter what the heck is going on, the stock's going to go higher. So it may be worth owning a couple of shares. But again, I still say I am seeing nothing to justify where this company is currently trading. Again, the initial video was done at $160 a share. It was tremendously overvalued. Now it's at $275 a share. I mean, I really don't know. I drew out some trend lines here. This is going back to, as we see here, the highs back in 2021. And I think I may have had these trend lines out in the last video. I honestly don't remember. I apologize. But we had basically a trumpet here, which again isn't really that definitive of whether it's going to be bullish or it's going to be bearish. Obviously, they brought it back up to the top trend line and broke it out really for no reason and have since climbed it up. And I also marked this up here. This was the high going back here November of 21. As you see here, the stock at the top of the screen. Oh, wait a minute. There it is. Okay. So at the top of the screen again, the O, the H, the L, the C. That is the open, the high, the low, the close. As you see, the high, $346.47. So this is why I drew these levels out here. We also had a top back here of 289.46, as you see. So that's why I drew out these two trend lines, because in my opinion, one of two things are going to happen. So as we see here, A, right here in this circle, the stock just in the last few days, what is this, May 2nd, May 1st, it's looking like, it came up and hit that high that it did back here in March. And this is why the red arrow is here, because it could indicate that the stock has just hit a double top and will begin to pull back and sell off back to this line here where it really should be 136. That is much, much more realistic. Or on the flip side, they may break it out above this trend line really for no reason, bring it all the way back up here to 346 really for no reason in my opinion, and then they'll reject it there with that double top, and boom, there's your big red arrow again. But I mean, realistically, again, not bashing NVIDIA. I know they, moved into the auto sector and they started putting their graphics cards in all these automobiles with the touch screens and all this GPS and all this crap. But at the end of the day, nothing is showing me that the company has an enterprise value of $700 billion. Nothing is justifying a market cap of $700 billion. I am looking at nothing but negatives here, realistically, for NVIDIA. And even with these earnings coming out, $6.5 billion, I really don't give a crap if they post $10 billion, because at the end of the day, this stock is tremendously overvalued. However, again, we do our analysis, we check the numbers, we check the charts. Sometimes we're very convinced that we are on the right track, and then as you see, even someone like myself gets it completely wrong, and the stock just randomly starts heading in the opposite direction. Now, if anyone did bet against NVIDIA when I made my video, of course, I take responsibility, and, I guess I could say I apologize for that. However, again, looking at the numbers we just looked at, I think you and I can both agree that I was on the right track, and the stock should have pulled back. So, even though technically I'm wrong with this one, I should have been right. All right? I mean, I guess you could say it like that. But switching over here to stock charts, as you see, look at the 50-day moving average. Again, since the bull drop, the stock doubled in value over the last 5-6 months. So the 50-day moving average went from 140, 150 level. Now it's at $259.89. It's just ridiculous. You have a very, very tight little pattern, little range here happening here with the Bollinger Bands up here at this level. And it's fighting and bouncing off of this mid-Bollinger Band as of late, but I really do think it's only a matter of time before it breaks the moving average, and starts to head down towards the other moving average. The MACD has been slightly pulling back, even though the company has been really raging and maintaining itself, which really just throws me for a loop again. RSI sitting here at 54.6, not really too definitive. However, even if the RSI was 90, it wouldn't matter, because apparently the stock just continues to go higher. Nothing affects it. Look at the RSI on the weekly, 72.5. Look at it for how long? We're talking, what is this? Early, mid-February. So since that time, look at this RSI. Since that time, the RSI has been consistently over the benchmark of 70 that a lot of investors use. So for the last 3.5 months, this stock has been overbought. Yet, they brought it from low 200s back to almost 300, right? How does any of this make sense? Look at the MACD. Look at the MACD. This is ridiculous. This is ridiculous. Even crashing this all the way down 50% back to the bottom Bollinger Band of 134.64, in my opinion, is not enough. Is not enough. This is a company, again, I mean, if you really believe in it, if you're really excited about this stock, then I can understand jumping in, trying to ride the wave, get back up into the 300s. Who knows, maybe one day 400, 500, 600. But again, realistically on paper, we look at companies like STEM that we've looked at recently. We have a lot of newer tech companies. Li-Cycle, right? L-I-C-Y, that was a company that's like recycling lithium batteries, right? We have a lot of new, young, up-and-comers. And in my opinion, if you are sitting pretty here with NVIDIA, I really think it's only going to be a matter of time before they seriously crash this down back to earth. So, again, if you want, ride the wave, try to catch that double top high here, 340 or whatever it was that we looked at. But I would seriously, in my opinion, consider getting out of NVIDIA and starting to reposition into some of these other companies that just are more realistic and will rally and accumulate, and appreciate this much over time like NVIDIA did for us, right? Reposition into some of these other companies, perhaps. Now it's time to ride the wave of a stock maybe like STEM and grab it at a low of like 350, 360. Turn around in a few years, all of a sudden the son of a bitch is at $11, $12, right? From this point on, you will most likely see a greater return with a younger company with healthy numbers, as opposed to just sticking with an overinflated stock like NVIDIA. But I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop them down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, like the video, thumbs up, helps out the algorithm, helps me get a few more eyes on the channel. Subscribe to the channel if you appreciate this content, because I know that you do, baby. But moving forward, like I always say, I understand that markets are rocky, and they're volatile, and they're uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. I want to thank you guys for stopping by, and I'm going to see everyone in the next video. Take it easy.